Hey guys, so Spotify are the leading platform for music and audio streaming across the world, and I'm sure a lot of you watching this video today will probably use Spotify yourself or have used it in the past. And it is a company that I've been looking at recently because I do believe that audio streaming is going to be even bigger in the future. And I do believe that Spotify have a great opportunity in front of them to become the biggest player in that sector and to potentially become a $1 trillion company and higher in maybe 10 to 20 years' time. However, in saying that, they do have competition from the likes of Apple with Apple Music, so it's going to be quite interesting to see if they can hold off the competition to continue to be the dominant player in the audio streaming space. So I thought in today's video I'd take a closer look at the company, including what the company actually do and a bit more about the background of the company, the growth they are experiencing and the future outlook for the company, as well as some of the main concerns that I do have about investing in Spotify right now. Be sure to drop a like on the video if you do enjoy it, that does help out the channel a lot, and also remember to subscribe if you'd like to see similar videos to this in the future. But apart from that, let's get right into it. So first of all, a bit more about Spotify and how they make their money. So Spotify is an audio streaming and media services provider that was founded in 2006. They are the world's largest music streaming provider at the moment, with over 356 million monthly active users on the platform. And almost all music artists nowadays do release their music on Spotify, and it really is one of the most accessible platforms to listen to your favourite music on, as anyone can create a free account from anywhere in the world. Spotify do also have a wide range of podcasts available to listen to on their platform, with a number of these podcasts becoming Spotify exclusives in recent years. So Spotify did go public in 2018, and they now have a market cap of just under $50 billion, with shares costing around $250 at the moment. They are currently down from their all-time highs of $365 per share in February of 2021, so there is about a 30% discount right now compared to what the all-time high was earlier this year. So Spotify generate revenue in two main ways at the moment, from playing adverts to users with a free Spotify account, and from monthly subscriptions from users who wish to upgrade to a premium account. There are a range of bundle packages for Spotify Premium, but the normal subscription package for a single user is $9.99 a month in the US, and this allows the user to listen to music completely ad-free, play music offline, and have access to on-demand playback. For those users who wish to remain on the free account plan, they will have to put up with audio adverts every few songs they listen to, and if this wasn't annoying enough, free users also cannot skip songs when listening on a mobile device and have various other restrictions when they're listening to the music that stops them from playing exactly what they want whenever they want. So Spotify make far less revenue from free users in the form of playing advertisements to them compared to their premium users, and therefore benefit greatly from a user upgrading their account to premium. I therefore do like the fact that Spotify purposefully make the app quite annoying and inconvenient to use on a mobile if a user is on the free account plan, encouraging them to upgrade to premium. Spotify do also run free trials for their premium service, which really does hook users in to signing up, and that does include myself when I first started using Spotify. So users take the free premium trial and then realise how much better the experience is with the premium service, and then they get used to the premium features during their trial, which makes it hard to reverse back to the free version, and that therefore makes people more likely to keep their subscription and start paying for it. So now let's look at Spotify's recent growth as well as their future outlook. So Spotify is growing at a rapid pace, and this is reflected in their user growth for both premium and free users. So between 2016 and 2020, Spotify grew their monthly active users from 123 million to 345 million, representing a compound annual growth rate of 29.4%. Their paying premium subscribers also grew significantly between 2016 and 2020, growing from 48 million to 155 million in that time period, which is a compound annual growth rate of 34%. Most recently, in Q1 of 2021, total monthly active users reached 356 million, a 24% increase year over year, and a 3% increase versus last quarter. Premium subscribers also increased to 158 million for Q1 of 2021, which is a 21% increase year over year and a 2% increase against last quarter. So this growth in their user base is also reflected in their revenue growth over the same time period. So their revenue has been increasing steadily every quarter, and in total has grown from 2.95 billion euros in 2016 to 7.9 billion euros in 2020, and this reflects a compound annual growth rate of 27.8% for their revenue. Now, 90.5% of Spotify's revenue does come from their premium users, making up 7.15 billion of their 7.9 billion for 2020, and the remaining 750 million euros comes from adverts shown to their free users. So at current exchange rates, Spotify's 2020 revenue equates to around $9.4 billion. Spotify do also have very good geographical diversification, with their monthly active users split very evenly between Europe at 34%, North America at 24%, Latin America at 22%, and the rest of the world is 20%. Premium users are more heavily concentrated within the Europe and North America regions. Now, these two regions make up 69% of Spotify's premium subscribers, with Europe being 40% and North America being 29%. So the global music streaming market was $20.9 billion in 2019 and is expected to grow at a compound annual growth rate of 17.8% until 2027. Now, as more and more people around the world gain access to the internet and various digital devices like mobile phones, tablets and laptops, platforms like Spotify are becoming more accessible and more popular around the world. So Spotify is really trying to transition from just a music streaming platform to an all-round audio content hub. They have recently been aggressively growing the podcast section of the platform, investing a lot of money to get popular podcast shows on the platform as Spotify exclusive. Now, as I'm sure many people did hear about this a little while back, but the Joe Rogan podcast was a massive exclusive that Spotify managed to acquire in a deal that is worth over $100 million. Spotify are clearly trying to grow their podcast listener base, and acquiring large podcasts like the Joe Rogan podcast shows their future intent and suggests that they are going to continue to push their podcasts and acquire more exclusive deals in the future. Spotify also has lots of future growth potential with untapped audio content such as audiobooks, news and sport. If they can start to provide this content on their platform, including popular content being exclusive to Spotify, this could really help to drive user growth further into the future. And this could also lead to future ways to monetize their platform as well, overall contributing to a higher revenue growth. Now, from experience, Spotify has a relatively sticky service, one in which many users will not really be willing to switch platforms unless they really have to. As a long-term user of Spotify, I have hundreds of albums saved, thousands of songs saved, and also dozens of playlists that I've created myself, and all of which would be really inconvenient to lose by moving to another platform. On top of this, they are one of the only music platforms that can be accessed from almost any device, unlike their main competitor, which is probably Apple Music, who mainly offer Apple Music as a complimentary service for their iPhone and other Apple devices. And because of this, I do believe that when Spotify really start to focus on their profitability, they have room to gradually increase their monthly premium membership price because their users are simply going to want to stay with Spotify rather than paying maybe slightly less on another platform and taking on that inconvenience of moving all of their music over to a different platform. So now I do just want to touch on a few concerns that I do have with Spotify. So first of all, in order to continue to grow and be the dominant player in audio content, Spotify has to compete with some big name competitor platforms. So as of data from midway through 2020, Spotify are the dominant player in global paid music streaming subscriptions at 34% of the total market. Now this is followed by Apple Music at 21%, Amazon Music at 15%, Tencent Music at 12%, and YouTube Music at 5%. Now, all of these platforms are backed by giant tech companies that have a lot of influence and a lot of cash on hand to back up the growth of their platforms. These companies also have large moats and intertwined products, meaning that it could be hard to escape their ecosystem for existing users. It does concern me a little bit that Spotify's market share could start to fall off in the coming 10 years or so, which could lead to a decline in user growth in the future. And that leads me on to the second concern that I do have, and that is that Spotify's market share for paying music streaming users has already been declining since 2015, where their market share has dropped from 41.2% to a reported 32.5% in 2021, according to the source of this data, which is Statista. Now, this is a concerning trend to see, and it is hard to see this reversing anytime soon when there are big players like Apple, Amazon, and Google that are all competing for the same space. But on the flip side to this data is just the music side and the music market, and it's clear that Spotify are focusing on audio media in general rather than just specifically music. So if Spotify can maintain a dominant market share for music only, while also growing their market for podcasts and other audio media, then this should be a good place for them to be, and it puts them in good shape for continuous future growth. And then finally, Spotify may be growing their revenue at a fast rate, however they are not profitable as of right now, and they made an operating loss of 293 million euros in 2020. So Spotify have to pay out royalties to record labels and music artists, and also have to fund new content for their platform, with the Joe Rogan podcast being an example of this. Nobody really knows how much this cost will increase or decrease over time. Maybe content creators and artists demand a higher piece of the pie, and Spotify will have to increase their royalty payouts in the future. Or potentially, the cost could start to fall over time as Spotify becomes an even more established platform in the audio world, which could mean that they do become the platform of choice for all content creators, which allows them to have some sort of leverage in the royalties that they do pay. Also, Spotify's sales and marketing costs have been increasing every year and reached over 1 billion euros in 2020. Now, as Spotify becomes even more well established across the world, I can see this cost coming down significantly, leading to more profitability in the future. So that is all for today's video, guys. I hope this video did give you a balanced insight and analysis of Spotify stock. Please remember though that this video is not financial advice, and I'm not a financial advisor. Please be sure to do your own research before you think about buying into a stock. But with that being said, guys, please be sure to leave a like on the video if you did enjoy it. That does help out the channel a lot. Also be sure to subscribe if you want to see more content from this channel, similar to this video in the future. Also drop me a comment, let me know what your thoughts are on Spotify stock in general. And apart from that, guys, thanks a lot for watching.